This is not on. Take this out. Hopefully that was recording my voice. This just died. I'm teaching 3 classes and all my technology doesn't have enough battery life to sustain me through 3 classes. So we'll see how it goes. Okay, so like I said, that's our simplified tax formula. Actually, what I need to do, bear with me for a minute because I'm going to put that formula up here so you can see how this works. So we start with our total income. Minus permitted deductions. Which gets us to our taxable income. Times appropriate tax rates. I have to write out appropriate tax rates. Equals tax liability minus payments, credits, get our, if it's a, so tax refund, it would be negative because our payments are greater than our liability, or tax due would be positive. All right, so here's our Form 1040. At the top, all of our identifying information, name, all that jazz. Social security numbers over here. Up here, you only put though, like if it's a single person, you just put their name. Married couple, you'd put both spouses' names. It doesn't really matter which one goes first, although I would always, at least in practice, I would try and keep that consistent from year to year, so we're not switching things up. Dependents don't go up here. Kids don't go up here, okay? Even if it's a single individual with kids, no child or dependent's name goes up here. That goes in a different spot. So, same with social security numbers. So, primary social security number, spouse's social security number. Again, it doesn't really matter which is which. Oh, please. No, sorry. I gotta remember not to touch it in the wrong place. When this happens. Next up is filing status. Oh, you'll see this, so the presidential election campaign, on your problems, your tax return problems, it mentions, I think on most of them it says they do not want to donate $3 to the presidential election campaign. That just means that you don't, if they want to donate $3 to the presidential election campaign, the primary or the spouse, then you would check this. If they don't, you just leave it blank. So on most of your tax return problems, I think you just leave it blank. Filing statuses here. You can see, we talked about these filing statuses in payroll accounting. Same filing statuses as are the choices on the W-4 form. So singled, married filing jointly, married filing separately, head of household, qualifying surviving spouse. Okay. This, we don't have to worry about this non-resident alien one. Let's see. Oh, the digital assets question. This is a requirement that you have to mark this as yes or no. Did you at any time during the year receive, sell, exchange, or otherwise dispose of a digital asset? Cryptocurrency, so Bitcoin, Ethereum, all that jazz. If you bought it, sold it, did anything with it, you have to check yes for that one. If you didn't, you have some, but you didn't do anything with it. You bought it back in, if you were smart, you bought it back in 2009. and you're just holding on to it, but no other transactions took place, then it would be no. They only want to know if you did something with it, because chances are if you sold it or bought it or something, you may have a gain that you have to report. So that's what that question is. On your problems, they do ask you to mark that, okay? So that's one of those areas where if you're going through your tax return problem and it's telling you it's incomplete and you just cannot figure out, you got all your numbers right, check some of these boxes and make sure you got them checked. So we'll go through this at a later time. So this has to do with the standard deduction. Dependents. So this is where dependents come. This is where children or anybody who's a dependent, they never go up at the top, they only go here. So this is where their information would go, their name, social security number, what relationship, are they your child, are they your stepchild, are they your brother, what have you. If they qualify for one of these credits, this is marked. We'll go through this when we get to chapter 10. We'll go through this in more detail. Okay, so total income. You see here, we've got lots of lines for income. Line 1A through Z. And then we've got 2, 3, 4, 5, 6, 7, 8. Oh, I did it again. Oh, come on, man. Thank you, Anthony. I appreciate that. All right, so all of these lines 1 through, actually it's through 9, because 9 is total income. So lines 1 through 8, 9, I'm just going to put that separately because 9 is where it's all totaled up. That's where our total income is added up. So these are all different types of income, and some of them get treated differently than others. Some of them have their own tax rates. That's really fun. That's going to be chapter 3. You'll like that one. So all of these, all income gets added up, totaled onto line 1. Then we start getting into some deductions, permitted deductions. Now this is where I said we've got a couple different types of deductions. Even though our simplified formula doesn't really show the different types of deductions yet, when we get to the more complex, more advanced formula, it will show the different types of deductions. So we've got our total income on line 9. Then we have these adjustments to income. It's a type of deduction. So that would be a subtraction. So line 10 is one of those types of deductions. We get to this adjusted gross income, which we're going to explore this concept in chapter 2. So we have kind of a subtotal here. We've got certain types of deductions, and then we get this adjusted gross income amount, which is a subtotal. And then we have other deductions. We have line 12, which is standard deduction or itemized deductions. Most taxpayers, so you get a choice between which kind of deduction you take, and you get to take the one that's biggest. Big deductions are better because it's going to reduce your taxable income, which is going to reduce, if you have less taxable income, you pay less tax. Exactly. So bigger deductions means less taxable income, less tax. So you do a calculation. You have your standard deduction, which is based on filing status. Over here on the left, it's displayed. So married filing jointly, remember we had our married filing jointly example there. They would have had a standard deduction of $29,200. That means they get to subtract $29,200 from their total income in order to arrive at their taxable income. So that's reducing their tax. Or we have this itemized deduction amount. Itemized deductions, we're going to go through that in chapter 5. What you do is you kind of do both calculations. You take the standard amount and then you do the calculation for itemized. Whichever's bigger is what you're going to take. Most people know off the top which one's going to be bigger. the majority of taxpayers take the standard deduction because it's usually going to be bigger than the itemized. But there are some taxpayers where the itemized deductions are bigger. So this is line 12, so another deduction would be line 12. Then we have this line 13, which is qualified business income. We're going to go through that in chapter 6. But that's another type of deduction. And then we add up all of the deductions, which is line 14. So line 14, that's our total. Total of these deductions, 12, 13. And then what we do is we subtract 14 from line 11. Remember I said there was this adjustment, I should say 11 up here. Total income, 11. So we're gonna take these minus the total that was up here is our taxable income. This is line 15. Here. It's convenient. It's the last line on the first page. It's easy to find. So that 270,000 from the example that we did earlier, it would have been this from line 15. So all of these calculations went into finding that number. Okay? So that's line 15. The tax rates, we kind of do that behind the scenes. You go to the second page of the 1040, and this is the tax. So between line 15 and 16 is where you do the calculation, okay? So we take the tax rates, we do that calculation that we did before to get our tax liability, which is line 16. So that's on page 2. And then you can see there's all sorts of other things here. We've got amount from Schedule 2. These are different types of credits, okay? So lines 17 through, and we have some additional taxes as well. So these payment, and so this stuff is a little bit more all over the place. We see payments and credits. So we've got tax calculated here, and then certain credits are subtracted from our tax that's owed. So let's say we had, $20,000 of tax that's listed up here that we calculated, but we are entitled to $2,000 of credits. We get to subtract that $2,000 from our tax to get our total tax of $18,000. And then we also subtract any payments that we have. So these are payments, and then these are a certain type of credit. We'll get into that in chapter 10. Refundable credits. They have some special status. There are refundable and non-refundable credits. I don't want to go into the nuances of that yet. That's getting too complicated. So we've got our payments and credits. So we've got some credits on lines 17 through 23. And 25 through 32. But line 33 is a kind of our total payments. So we get all of our total payments here, payments and credits. We get down to line 34. If we are due a refund, so if our payments and credits were more than our tax liability, we would be due a refund. If our payments and credits were less than tax liability, we would have an additional amount due. So on line 34, that would be our refund. So this is 34 and 35A. Why do we have to put it down twice? Well, so line 34 is calculate your refund. Here's what the refund is. Line 35A is, hey, do you want that refund back? Well, most people do want that refund back, but there are options for having the IRS keep that refund. But line 35A would be, yes, I want all of the refund back. So if you are due a $2,000 refund and you want it all back, both of these would be $2,000. You'll see this on the tax return problems when you do them. It'll fill in both. But there are certain circumstances where you might just want the IRS to keep the $2,000 because maybe you already know you're gonna owe more money next year. And instead of sending them a payment separately, you tell them, you just keep it for next year. Apply it to next year's tax. So you can do that, you can choose to do that. If you owe though, if it turns out that your payments were not enough to cover your tax liability, that's the amount that would be on line 37. There. Now, so I did this so that you can see that the form follows, for the most part, this simplified formula. And it has to be done in order, okay? Now I say that, but you're gonna get into some tax return problems where, well, the 1040 can be done in order, but when we're putting all supplemental forms together, sometimes it's gotta go in different order. But for right now, just know we're gonna start with our total income and then work our way down. Let's see. Filing status, we already talked about that. So some of the different types of income we can talk about. So wages, salaries, and tips, this is on line 1. Actually, I'm going to use the form to talk about that. So line 1, amounts from W-2s. So the amounts that were in box 1 of the W-2s, that's going to be up here. I'm not going to talk about household employee wages. Tip income that was not reported on line 1, so if you had other tip income and you have to report it, but it wasn't on your W-2, it would go there. I'm not going to talk about the Medicaid waiver payments or the taxable dependent care payments. Let's see, or the adoption benefits. Other earned income, so if there was something, this is all essentially earned income, so income that's going to be subject to Social Security and Medicare tax, or that should have been there. Other types of income, we've got interest income here on line 2A. So you see these are all line 1, so they're all kind of the same type of income. Line 2, we've got tax exempt interest, so that would mean interest income that's not subject to tax. That's a nice thing to have. We're going to talk about that in chapter 3. And then taxable interest. We've got qualified dividends and ordinary dividends. We're going to talk about the difference between those in chapter 3 as well. IRA distributions, taxable amount, total amount, taxable amount. Pensions and annuities, total amount, taxable amount, which implies that they could be different. You could have amounts that are income but are not taxable, okay? Social Security benefits, total Social Security benefits, and then the taxable amount. Capital gains and losses, we're going to go through that in chapter 7. This is when you sell assets and you have a gain or a loss on that asset. That income or loss would go there. Additional income from Schedule 1. I'll show you Schedule 1 in just a second. It's other types of income that are not listed here. And then we've got our total income. I think they've got Schedule 1 up here. You guys all know what a W-2 looks like. I don't need to go through that. Here's our Schedule 1. So Schedule 1 has 2 pages to it. It has additional income on page 1, and then it has adjustments, which are subtractions, deductions, on page 2. So these are other types of income that may be taxable. So some of the things that are on here, unemployment compensation, so if you received unemployment benefits, alimony, taxable refunds, sometimes your state refund is taxable. Cancellation of debt, if somebody forgives you of debt, that's actually taxable to the person who received the cancellation. Jury duty pay, that's also something, even though you don't get a form for it. So even if you don't get like a 1099 or a form for something, doesn't mean that it's not taxable. A lot of different types. Look at this, Olympic and Paralympic medals. Did you know they were taxable? When they get a medal, gold medal is going to be worth more than a silver. It's going to be worth more than a bronze. What's that?
I think it's like Isn't it $250,000 for gold or something?
I don't know what, it's whatever the value, I would assume it would vary, because the value of gold varies.
Well, it's not the metal that, like, the country pays you, and I think in the US, if you win a gold, it's 250,000.
Yeah.
Silver's 125.
Yeah, so that's taxable, Olympic or Paralympic medals. So all sorts of wages while earned while incarcerated. So there you go. They don't really let you get away with too much. Almost everything, essentially, all income is taxable unless they say it isn't. So you can assume that everything's taxable unless there's something in the tax code that says it's not taxable. So these are all additional types of income that are totaled up on line 10, and then you'll notice this on the forms, they have the instructions right there. Combine lines 1 through 7 and 9, this is your additional income, enter it here, and on form 1040 or 1040 SR, 1040 SR is for seniors, and all it is it's big print, it's really insulting. So once you reach a certain age, the programs will automatically I think it's like 60, will automatically generate this 1040 SR. I had clients where I would go in and I would say, don't generate this, because it's just like big print, it's, like I said, it's insulting. Or 1040 NR, that's for non-residents, they have their own particular type of tax form. Line 8, so it's telling you to total all this, put it there, but don't just put it there, you're gonna have to transfer that onto line 8 on the 1040, which is right here. Additional income from Schedule 1, line 10. So it's cross-referenced on both of these forms. So that additional income goes there. Like I said, the adjustments to income, this again, remember I said Schedule 1 has 2 pages. One is additional income, right there. The other is adjustments or deductions. So that is from page 2 of Schedule 1. I don't know that they give us page 2 of Schedule 1 here. Let's see if they do. Oh, they do. Okay, so these are adjustments to income. So these would be subtractions. We're going to go through these in chapter 4. Things like educator expenses, moving expenses for members of the armed forces, certain retirement contributions, self-employed health insurance deduction. We're going to go through all of these. Well, not all of these. We go through most of these in detail. A lot of the other ones we do not go through. Student loan interest deduction, we do go through that. So if you paid interest, if you're paying back on a student loan and you paid interest on it, that interest could be deductible. So these are all different types of, they're deductions, but they call them adjustments here. And when we get to this chapter, I'll explain why they're not called deductions, okay? But it's the same concept. It's a subtraction from income. So again, all your adjustments enter here and on form 1040, 1040 SR, 1040 NR, line 10. So that would go, you total it up and then you transfer it up here to line 10. Adjustments to income from Schedule 1, line 26. Again, cross-referenced. There. What else do I want to say here? Okay, so this is just going through. I'm not going to go through these forms. You guys you're familiar with 1099s. You've had, like in your payroll accounting, you've had 1099s. You're familiar with the W-2s. These are just different types of 1099. So this first one is a 1099 INT form, which is for interest income. 1099s have there's all different types of 1099s. The 1099 DIV is for dividends. The 1099G is for government payments. So unemployment payments would be on here. Tax refunds are on a 1099G, like state tax refunds as well. Talked about the standard deduction. And then our taxable income. So, like I said, that getting to this is a big part of the work. Okay, and we go through chapters 1, 2, 3, 4, 5, 6, 7, 8. Trying to think, what's chapter 9? 7, 8. Oh, chapter 9 is payroll. Chapters up through chapter 8 is all getting to here. Okay. We talked about the credits in chapter 10. Chapter 9 or 10, I can't remember. One of them's credits and one of them's payroll. But the majority of our work is just getting to this number right here. Okay?